So what's really interesting is that you as a municipality, your cost to process payments is actually much lower, or the underlying cost is much lower than it would be for local businesses, right? However, that cost, that lower cost, is not being passed through to you, and I'll explain that in a minute. The second entities that we talk about are the card brands. This is your Visa, MasterCard, Discover, American Express. They're the ones that run the networks. And so these networks are very simple, really. They just connect your credit card machine or your software. They just connect to the banks. And so they're the ones that are able to reach out to the bank and say, hey, this person wants to spend $100. Do they have $100 in their bank account, right? And if they do, they say approved. And if they don't, they say declined, right? So that's what the card brands do. They also have some underlying fees that they charge, typically a smaller amount, but they charge some fees as well. Then we have the processor. So these are companies you've heard of, like TSYS or Fiserv or First Data or Heartland or Nuvei or other companies like that. The processor is the one doing most of the heavy lifting here. So they're actually handling risk, billing, compliance, settlement reporting. This is what Full Stack Payments is. So we're one of those companies. We're a payment processing company. And so we're making sure that the merchants, or in this case, the municipalities, are able to process payments, that they have hardware to process payments or integrations or invoicing or whatever they need to be able to process payments. And then we're handling the risk and all that on the back end. Again, government institutions, pretty much the lowest risk merchant account that can be boarded by a payment processing company, right? So you would think they would be getting a very low cost. Not the case usually, right? But again, from a processor perspective, municipalities are fantastic in this way. The last entity is the ISO or the agent. You may have dealt with someone like this where they've reached out to you. It's called an independent sales organization. It's actually a specific kind of sales organization for payments. They may have reached out to you to say, hey, we want to do your credit card processing. We can lower your rate. We can get you new machines or whatever that is. And so that's an ISO or an agent. Usually they're the ones that are kind of managing the relationship directly, and they're doing the pricing. Full Stack Payments is both the processor. It's a wholesale ISO, it's called, and then we have the processor stuff we've built on top of other legacy companies. So we're able to control a lot more of this process, which allows us to do some interesting things. Okay, so there you go. That was the boring stuff. Now it's going to get practical. Okay, so how is this working right now for for government institutions? So most of you are currently passing on a fee to your residents of between 3 to 4% when they use a card. Some of you also take ACH and you're passing on some cost there. I'll cover that on another piece of content. We'll just talk about the card processing here, but just know that we do the ACH processing is something that can be done easily as well. But what's happening is you're doing a 3 to 4%, and this is very standard. That's a good thing to do. I'm not in any way discouraging you from doing that. That's a good thing to do. Your residents expect that. It's not a negative thing to do that and have that fee on there. What's interesting, though, is that the underlying cost of those transactions is only about 1 to 1.5%. So it kind of leaves you wondering, like, well, okay, what's happening with all of this other money, right? So you think about, 3 to 4%, but only 1 to 1.5% of underlying cost. That means that something like 2% of all the revenue, of all the fees and taxes and all of these things in the state of Alabama, 2% of that is profit, and it's going somewhere, right? And where it's going is that payment processor that we talked about, right? They're keeping that money because their cost is actually very low on these accounts. So there's quite a bit of remaining, spread there that's available for somebody. These hard costs are usually at the bank and the card networks. So the processor covers risk and billing and compliance. And so the processor is going to want to make a little bit of money. I'm a processing company. I got to make a little money. I got employees too as well, right? So we have to make a little bit of money. But what happens is with municipalities, they often don't have any transparency into, how much money is this processor actually keeping on the account. And so we want to talk a little bit about that. So there's two different programs that most municipalities are using. In speaking with Alabama municipalities so far, there seems to be a mixture. This first one is called a service fee model. Now, a service fee model is very interesting. It's actually something that's regulated by Visa, and they allow only very specific types of institutions to use this, government being one of the few that can do this. The way this works is that the payment processing company sets up two different merchant IDs, or MIDs, we call them in our industry, but they set up two different merchant accounts. One merchant account is there to charge the resident what they owe, their obligation. So they owe $1,000 in taxes. So one merchant account runs a $1,000 transaction and sends the entire $1,000 to the municipality, right? And that seems really convenient. You know, you get all the money. There are no fees or anything like that you pay. Then there's a separate merchant account that's created, and that merchant account collects this service fee. And that merchant account isn't owned by the municipality. They don't have any visibility into this merchant account. It's just a completely separate merchant account that's owned by the payment processor. And they are adding a fee onto this transaction, and they're taking all of that money. They're covering all the cost of the transaction, of both transactions, that occur there. And basically the municipality gets to kind of wipe their hands clean of that and never see any of it. It's like, we wanted $1,000. We got $1,000. This other company handled it for us. They collected the fee to run the transaction. And so it's a very clean model for the municipality. Again, there's one slight issue with this model, which, by the way, we run this model as well. It's totally fine to do this. But the problem is, if you actually have no visibility at all into that other merchant account that's accepting the fee, you have no idea how much money are you actually paying this credit card processing company to do this transaction, right? They're getting 3 to 4%. Part of that is cost. Again, usually 1 to 1.5%. Maybe they have a couple of other costs involved. And then the rest of it, they're just able to pocket that without any kind of transparency or accountability to the municipality. So this is money that's just leaving the state of Alabama. So again, governments use this because it keeps the full base revenue with the city. It makes it very easy to deal with the vendor and like vendor approvals because there's literally no fees. So the vendor's like, we're not charging anything to you. We're just charging money to the resident. So it makes it very easy for approvals. And this is a very, very common program, especially in larger municipalities. So we see in the larger municipalities, they tend to go this direction. The smaller municipalities tend to go with the next one that I'm going to show you. So again, there's nothing wrong with this model at all. It's totally compliant. It's very clean. It's a great model. We use it as well in certain situations where it makes sense. But I will say that I think the intention of using this program has been a little bit skewed against the municipality and kind of not in the municipality's favor, in that the processing companies present it as kind of like, well, this is how payment processing works for a municipality. This is what you do. And in actuality, in some cases, and again, nothing, there's some good companies out there doing this, but some companies are saying, well, really the reason we want this is because we want this separate merchant account where all the profit's going to flow, and we don't want the municipality to see that at all. We're going to handle that ourselves. They don't need anything to do with that. And I was a little shocked like a year ago when I discovered how this all works, of like, because I've been doing payment processing for a long time for big organizations and for profit and even non-for-profit. But when I saw how government was working, I was like, wow, this is a really good deal for the payment processor. They must really be liking these government deals. This is great. And so Tim and I and the rest of the team were like, maybe we could do something about this. So this is the second one here. And by the way, these two models get confused a lot when we actually speak to county clerks or mayors, things like that. Many times they don't understand the difference between these two models because they can appear very similar. So this model is a dual pricing or a surcharging. And so this model is nearly identical as far as the resident in their experience. They need to pay that $1,000 in taxes. There's a 4% fee. So they're going to pay $1,040, right? With the service fee model, what actually happens behind the scenes is that two different transactions are settled. One transaction for $40 that goes to the payment processor. They cover all the fees and keep the rest. One transaction for $1,000 gets processed, goes to the county, right? With this model here, again, the exact same resident experience. They need to pay $1,000. You're charging 4%. They pay $1,040, right? But the difference here that's important is that this is all happening within one merchant account. So this is all happening within the county's merchant account. So the county gets to see all the data. When the credit card processing statement comes in, it's like you didn't run 1,000, you ran 1,040. Now, again, the payment processor still takes out that $40 and keeps it, but it's your $40 that they're taking as a fee. And so what that means is on the statement, you get to see all of the data. So the card cost is, all of the costs are visible. The profit is very easy to calculate. So it's a bit more transparent. And again, what I will tell you is in many, many, many cases, this is actually much easier to set up than the service fee model. A lot of softwares have easy ways to integrate this type of a program, but not the service fee, because there's these two different merchant accounts and you have to reconcile, and it's kind of a mess. So in some cases, this is fine. And one of the main points I want to get across today is that this whole service fee model that a lot of government institutions are using, where they're not doing this, they're doing the first one I showed you, where they have no visibility. It's not like that one has these massive advantages versus this model. In fact, in my opinion, this model is simpler. The costs are a bit lower. There's some big benefits here. Either one is fine. That's the key thing. Either one of these is fine. They're both compliant. And so they can be done in this way. I will also say that from a resident experience, this model has a slight advantage in that from the resident's experience, when they use a service fee model, they literally get two different charges on their card. One for 1,000, one for 40. The one for 40 will usually have a different name of who charged it, because it wasn't charged by the county. It was charged by the payment processing company. So again, most residents are used to this, but it is a little bit off-putting when you run a transaction for 1,040 and instead you get two transactions on your statement. So again, this model is also totally fine, easier to set up, simpler to understand, much more transparent, which again, in my opinion, is why a lot of the payment processing companies do not enjoy this model as much, because it's a little more transparent. So there within this model, there's a couple variations of it. There's dual pricing, or like a cash discount. That's where you're displaying a higher price and then offering them a discount, or displaying two prices. So kind of like a fuel station would have a cash and a card price. That can be a really good customer experience, where they can see, okay, if I pay with maybe an ACH, it's going to be $100. If I pay with a card, it's going to be $104. So that can be good. Again, a little more complicated to set up because you have to put signage up and things like that. So the more common one is a simple surcharge, and this is where we're just adding a fee. So again, exactly like the service fee model, except that when that fee is added, it's one transaction that has the underlying transaction plus the fee amount. By the way, I am taking questions at the end, so I'll make sure to leave plenty of time for the questions here. So, okay, so let's go to the next one here. So we already talked about this, but I want to add one additional bit of data to this one here. So the opportunity here from an economic perspective is we have the fee that's collected, again, whether that's service fee model or like a surcharge model. Either way, there's this 3 to 4% that's collected. There's a hard cost, and then that creates a margin pool. So it creates this spread. What Full Stack Payments does is we provide complete transparency to the municipality of exactly what we made on this transaction. And what we do is we have a program that allows you to repurpose 50% of that money to go back into the municipality, to go towards programs that you're passionate about. And again, I'll show you a model here in a minute, but depending on how much you process in payments, that number could be pretty significant. So again, here's an example of kind of a common example of what we've seen. 3.25% fee, 1.25% hard cost is 2%. So again, $100 transaction, $2 of that is profit, right? So $100 transaction, you're actually, the resident is actually paying $103.25. Out of that extra $3.25, $2 is profit, right? $1 gets returned back into the community through our reclaim and repurpose program. And the other dollar goes to Full Stack Payments to cover our costs and allow us to make a profit from servicing these municipalities. So again, pretty simple math, but just to give you kind of a more of a visual on this, if you are processing $2 million a year, I know a lot of you are smaller. I've talked to many, Tim and the team have talked to many different municipalities. I've been involved in some of those conversations. But again, $2 million a year in volume. This would be card and ACH volume. That would be $20,000 a year that would be returned to the municipality as an estimate, right? 5 million in annual volume, 50,000, 10 million, 100,000, 25 million, 250,000. We're working with a county down in Florida right now that does about $500 million in annual volume across all of these different things. And so there's a large opportunity here to partner together to, of course, benefit full stack payments, but also to benefit Alabama municipalities and even the state of Alabama as we continue to work together in those partnerships. So again, you could think about this, where would you put this money if you could get, even if it's a couple $1,000s that comes back, or $5,000 or whatever, what would you do with that, right? Could that go back into maybe Parks and Rec? Maybe you need new hardware, emergency funds or reserve funds that have been depleted, staff training, resident tools, etc. So what I want to talk about now is, how do you actually do this? Like, how do you implement this, right? You're already processing payments. So I want to talk about some things here and make this very, very practical, and then we'll do some Q&A, and then I'll give you kind of an opportunity where you could reach out, and my team would be happy to do a free evaluation for you to help you out with this. So what is integrated payments? So payment processing can be integrated into your current flow. So if you already have municipal systems like for utilities, taxes, court fees, parking, licenses, permits, we can take that and we can integrate right into that. And I'll talk about that in the next slide a bit more in detail. But we want to make sure that people have this experience. I want to go back to that. I talked a lot about the economics, but again, I want you to really think about this question of when the residents in your community have to pay something to the municipality, right? How does that experience compare to when they need to pay Amazon, or they need to pay Walmart, or they need to pay a local business, right? Is it a much, is it a similar experience? Is it a streamlined experience? Are they able to use their mobile phone? Or is it, oh my goodness, oh no, I have to pay my utility bill again. I have to call in and I have to do this thing, or I have to, type my card information into some, is it that, or is it like, hey, no, this is actually a good experience? Because again, remember, throughout the course of a year, most of your interactions with your residents are going to involve them paying some money, probably money that they don't want to pay. So we probably want to make that as streamlined and easy as we can so that it's a good experience. So again, this gets into, we want to integrate things like online options, over the phone, mobile, in person, text to pay, kiosks, all of these types of things. So the outcome is, again, less rekeying, faster close, more choice, cleaner reporting, data backup to systems. Like, we want all of these things to just work. So how do we get to that point? There are 3 paths to make this work. Okay. Path number 1, I call this the easy path. Okay. This is just integrate into the software that you already use. This is where my team does all the work. You do basically nothing. So, and this, again, I say my team, this could be with any processor. Like, this is a great option. So the first step is to say, like, okay, what kind of software are you currently using? Again, I mentioned the Florida county. We just finished integrating into their parking system. Tim, what was the name of the parking system? I forgot the name all of a sudden.
That's Park Mobile.
Park Mobile. So Park Mobile, they just done a deal. Thank you, Tim. And they just installed this Park Mobile system. Well, we were able to work with Park Mobile and set up a merchant account, and that was it. And the county did really nothing. They just approved that we were able to do that, right? So this is, I would say maybe 50% of the time we're able to do something like this, where it's like you already have a software, it already works with some gateway that we're already integrated to or something like that. And we can just do an integration and we can switch it over. And now the only difference is it's when the payment is running, it's now running over our payment rails. We are now reporting back to you on the profit and reclaiming and repurposing 50% of that back into the community. So that's always great when we talk to a municipality and we find out they're using a software we can integrate with. It's like, yes, this is fantastic. So think of this more as you're changing a carrier, not like a phone replacement. So if you got like a Verizon phone, right, and you're like, well, I want to keep my iPhone, but I'm going to go to Sprint or T-Mobile, right? But you can keep your phone, and you just got to go and negotiate some new rates and a new program, right? But then you just switch the phone over. Very similar to that, right? So you're still using the same system. We're just doing an integration. So that's path number one. Path number two is a billing integration. So the billing integration is when you have a system that you use, but that system does not directly take payments. So you may have a utility system or something that's keeping track of balances, who owes money, even calculating usage and all of that. But that system then doesn't directly do the actual credit card processing form. So when this happens, this is still very easy for you. It's a lot harder for us. And what that means is we have to do a little integration into your system, and we have to pull that balance list out. So if you tell us, hey, once a month we want to bill everybody on the first, well, on the first we have to build a custom little code that grabs your balance report out of that system, pulls it in. We, will send a text, email, or link to the, to the customer, the resident, to pay. And we also would have to do like reminders and things of that nature. Once the payment is made, we then have to send something back into your system that says that this one's paid. So that way, who paid and who didn't pay. Obviously, that's very important, especially in things like utilities and taxes where there are deadlines and all of that. So this is path number two. Again, pretty simple from your perspective, a little more work in terms of kind of collaborating with our team. But again, we do all of the heavy lifting there and make it pretty simple and seamless for you. And again, this is where you can really improve the experience for your residents. We've talked to several municipalities where they have these systems where it's really not integrated payments, and they're generating these balances, and then they're telling people, oh, to pay your utility bill, you have to just come in here and swipe your card or tap your card on the device or call us over the phone or something like that, which is very inconvenient. And then also for the team, they then have to say, okay, there was a payment. They got to pull up the system, find that person, mark it as paid. So this is where we do those integrations. Pretty easy for us. We get the integration done. It just, when they owe the money, we send them a link. They click the link. It goes to a page in our system. They pay it. That sends something into your system. It updates it. So we can streamline a lot of that. So if you have a process that's either inconvenient for your residents or friction for your team, the odds are we probably could make that process better. A lot of variation there, a lot of different ways that can work. But again, most likely we could make that a much better experience for everybody involved. Okay. Path number three, the simple invoicing and in-person payments. Now, I'll be honest with you. I was a little surprised that this one ended up being used as much as it is, but it's actually pretty cool. So again, if you look me up online, James Shepard, you'll see I'm associated with a lot of different businesses. So I've been in the payments industry for a long time. I also own different software companies that service different types of businesses and organizations. And one of those is a company called Stackably. And Stackably is a very simple, streamlined invoicing and payment software. And as we talk to municipalities, a lot of them were saying, look, we don't have all this fancy software. We don't necessarily need that for what we're doing. We just need to be able to, get people to pay their court fine when they show up. And we need to know that they paid it. We need to send an invoice out because somebody owes money for a business license and we just need them to pay it. And what was happening is in those situations, oftentimes they had 3 or 4 different systems that didn't talk to each other, and they had different hardware devices all over the city, and they didn't talk to each other. And then they had different merchant accounts and they didn't talk to each other. And so it was like, wow, it's very confusing. We can replace all of that with one system, where you have one system where you can keep track of who owes money in that system. You can send invoices via text, email, a little portal link they can log into and pay. They can even have a mobile app that they can download on their phone, the resident, and look in and see what they owe, and they can pay it right from their phone. And you can also get a credit card terminal or a little point of sale type of a system, or whatever kind of hardware is necessary for your use case. And again, that all ties into the same system. So your entire team is working in one system to do these payments. So again, if you're not using, more advanced software and you're like, hey, our our county, or our city, like we've talked to several, we process 10 to 20, maybe $30,000 a month in payments. Some are ACH, some are card. We just, people come in and pay here in person, or we need to send out a payment link for them to pay via invoice. If that's what you're doing, we can have you up and running in no time, and it will be a huge change for you because everything is in one system. All the reporting is in one place. And again, we're going to take 50% of the profit and reclaim and repurpose that back into wherever you tell us you want to redirect those funds. And so it's a way for your county to, again, repurpose some of these funds and also hopefully make a better payment experience all the way around. All right, so 2 more slides here. This is kind of the last main one, and then I'll pull up a slide where you can see where to go to take action, and then we'll take some questions here. Happy to answer any questions that you have. So a couple of questions to think about. Number 1, which merchant accounts or MIDs, again, I'm using industry jargon here, but which merchant accounts or payment processing accounts exist and who owns them, right? Do you own your own payment processing account, or are there these payment processing accounts where somebody else is processing payments and they're processing these service fees and they're keeping all of this money? Again, that's not bad. That is a totally fine model. We run with that model all the time when it makes sense. There are certain softwares that's the way they do it. Totally fine. But the question is, you need to be making sure you're getting some kind of transparent reporting on that to understand, how much money is flowing out of your county. Because frankly, my advice is always keep the fee the same and just repurpose 50% of the money back into the county, right? If you're already charging 3.5%, keep doing that, but just recognize that that's generating some additional money from your residents that you can repurpose back into the community. If you're not going to do that, then look and see how much this processing company is making, and you might reduce the fee a little bit. If you're not going to repurpose the money using our company, why are you having your residents pay all of this money that's going out of the community, right? So my advice would be the money's already there. The residents are used to paying it, and they're going to get big benefit out of repurposing the money back into the community. So it's best to leave the fee the same. Partner with a company like ours, it's going to repurpose the money back in. But if you're not going to do that, be aware the processing company is making quite a bit of money on those fees that you're charging. So understanding that, what's the hard cost versus the markup on the account, making sure there's transparency there. Making sure you're reconciling correctly. Where do these service fees go? How are they being reconciled? So this is more if you're doing that surcharge or dual pricing model. It's very important to understand that a lot of payment processing companies don't really understand these programs very well. And they can, set up situations where you're actually not even getting the full amount of the payment that you were supposed to get. So you got to make sure you're reconciling that correctly. It's very, very challenging there if it's not done right. And then these next 3 questions are more about the implementation. So what kind of software do you have? Can the payments just integrate right into the software? If you're already using a software that you like, we would want to talk with you about that. We can do our homework and find out if we can integrate. What does the resident experience look like across channels? This is a really important question. And again, we didn't spend a lot of time on it, but I really want to drive that one home because I think whether you work with us or somebody else, you need to drive that experience. And I can tell you from the payment processing side, and again, I know it's different in municipality versus business, right? Because for a business, if somebody doesn't like the experience, they don't come back. In a municipality, it's not the same, right? They're still going to have to pay those taxes. They're still going to have to pay that utility fee. But I think we're all in agreement that we want to give people the best experience possible. And the challenge here is, again, think about that experience for your customers. Think about the way you pay for things. How would you feel if you went to Walmart and they made you pay for your order the same way that you make people pay for their utility bill? Would that be something that would be a friction point for you? And if so, well, let's fix that, right? The technology is there. It's not going to cost you any money really to fix this problem in most cases. I think of the municipalities that we've talked to so far, the ones that needed some additional hardware, we actually gave it to them for free in a lot of cases. So it's really not going to cost any money for you to fix this problem, but it just, you just got to do a little digging and see what that experience is like and explore ways to improve it. If there's a rebate, revenue share, how is it calculated and reporting monthly? So again, this would be working with somebody else. With us, we have a very specific program that is fully compliant, reclaim, repurpose. And so I won't get into all the details of that. Tim can talk to you about that another time. But But we have a fully compliant program that allows the municipality to just repurpose this money right back into an area that they would like to have it into. So yeah, and so again, a good diagnostic should answer these questions in writing for you. And again, Tim introduced himself. I've got Tim's email on here. You can also go to fullstackpayments.com/government to get a little more information on that. We actually have that page set up specifically for Alabama municipalities right now. And again, we're more than happy to jump in and review whatever you have and answer questions. So with that being said, I will turn it back over to Mary and to facilitate here and see if we have some questions to answer.
Sure. If you want to go ahead and if you have a question, unmute yourself and ask away. Anything?
See, Mary, I never know at the end of these things, it's like, did I do such a good job that nobody has any questions, or did I do such a bad job everybody fell asleep? I don't know which it is. But
Is the presentation available so we can share it with other members of our council and our municipality?
Yes, sir. Yeah, I'm going to provide this to Mary, right? Actually, Tim, maybe you could take care of that, and Tim will get that over to Mary and make sure she has it, and we can get that out for sure.
Absolutely. I did start recording it about 5 minutes into the presentation, but we do have this recording or as a recording.
Awesome.
So
I did want to say that I am a fan of the ACH payments as far as on the business side of it, and it does seem that most everybody can navigate that well. So that's, if any municipalities out there is wondering, it's very easy to navigate.
Yeah, let's talk about ACH for a minute. So one of the biggest benefits of ACH is that payment method never expires. So when you are, let's say, holding a payment method on file for something like a recurring, a utility bill or something, if it's a card, well, that card will expire and then it won't work in most cases. So ACH is nice for that reason. And so you're going to get the money. The other big thing is all of those underlying costs that I talked about with card processing, none of those exist for ACH. ACH is very inexpensive. So you could do a fee of maybe 1.5 or 2% on ACH rather than the typical 3.5. Or if you do the full 3.5 on it, well, now you're generating even more margin, even more profit there. And so we do ACH processing as well. All the things we just talked about a minute ago, we can do ACH as well. And again, when we give you the report at the end of the month, it says, here's how much was processed. Here's the margin generated. ACH is included in that. What's interesting is, by far the best experience I've seen when I've been involved in lots of big studies of like consumer behavior and all that. By far the best experience I've seen is when customers are given a choice. They actually like to have a choice. They want to know, can I pay with my card? Can I pay with ACH? Can I click a link to pay online? Can I come in and pay? Like, they want to have options. They just want to be able to pay however they want. There's not like one specific method that everybody prefers. It's more of people want the choice to pay the way that they want. So, but yeah, thanks for bringing that up. Good point.
So I do have a question. I don't know if I can be heard or not.
Yeah.
All right. So Gadsden just went through an audit wherein we do have the mixed modules. We do have, or the mixed models. One of our departments does have where the processor keeps the fee versus one that actually where we get the fee. During that process and during that audit, we discovered that while we had made profit, we are not allowed to make profit. Not only within our code, but Code of Alabama that told us that which the auditors handed off to us, that we could only charge up to the exact amount that we were charged.
Correct. Yeah.
How do you work around that?
Yeah, for sure. So first of all, there's going to be a much more in-depth answer that I'm going to give to Mary in writing, because again, I'm not an attorney, so I can't provide legal advice, but I will give you the high level here. Okay. So yes, you're correct. So your county is not allowed to make a profit, right? Now I'm allowed to make a profit, right? And it turns out that my company is allowed to repurpose some of my profit back into your municipality. So I'm allowed to do that. However, there are some very specific compliance guidelines around this in terms of kickback laws and things like that. Our team had to engage a overpaid attorney in DC to do all of this work. And so, yeah, so I will provide a much more in-depth answer to that. But again, the short answer is you are correct. You never, ever should be getting that fee money. So in other words, even if it, like I mentioned, the second model where it's like a surcharge where it's just your merchant account, if we were doing that for you, even though it's your merchant account and we're running this one payment for like $1,040, you would never get the $40. The $40 always comes to us. Right. And so that's how, and then when you go to reconcile your books and do the audit, it will always show, no, you got the amount that you processed, and then we get the other amount and take the cost out. The difference here is we then have a completely separate ledger reconciliation process where on our side, we provide this reporting to you of here's the additional markup that was generated on all these things. And then you have already told us where you would like us to repurpose this money, and we can direct that accordingly. So, it's probably the best answer I can give you. Again, I don't want to get too much into the legal side. I'll leave that to Tim to work up the. I know we have a document along those lines from our attorney to provide, and so we'll get that to Mary, and she can send that out as well. So
yeah, that was our one thing that as I sat listening to this, knowing that I've just gone to this, I'm going to have to rework at least a portion of the city's processes. So that's kind of one of those things that I definitely, one of the reasons why we sat in on this and wanted to make sure that I had a better understanding of how it is being done legally, because I'm very fond of it being legal.
Yeah, me too. Yeah, and again, it is a really good point that you brought up too. It is another one of the big reasons that those service fee programs have been popular, is because it also removes this kind of compliance overhead from the city, and there's been this perception that like that's the only way to do it, but it's not, right? There's this much easier way, in my opinion, to do that. But again, the service fee models can be good for that reason as well, to keep that clean. But again, what I found is either of these programs we can make totally compliant. It's actually not hard at all to do. It really comes down more to technology in terms of which of these programs is going to be the best fit and kind of that use case. But yeah, in either case, absolutely, you should never be collecting the fee revenue. That's for sure. It's way too complicated to do that and makes reconciliation a nightmare. But yeah, the key thing is you want the processor to collect the fee revenue, but you want to, get some of this money repurposed back into the community. So. Okay. Any other questions for me today? Okay, well, Mary, before you close us out there, maybe Tim, if you want to just quickly, again, provide whatever, I guess we have some contact information up on the screen, but if you want to provide any additional insight real quick of just kind of next steps, if anybody wants to reach out and kind of get more information and a free evaluation.
Sorry, trying to find my mute button. So yeah, my information is there. I will send out an email. You've probably been getting our emails already, but again, my name is Timothy Dow, timothy.dow@fullstackpayments.com. And yes, please, fullstackpayments.com/government. That's a great place if you guys are really interested in allowing us to dive in and do a diagnostic for you. At the very least, we can provide some value to you in that way. So if you go there, you'll see there's a form there. You'll be able to request that diagnostic, and then we can start working together. All of that information goes directly to me. So I am your first point of contact on all of this. So yeah, please reach out either directly to me through the email or to that website, and I'll be happy to work with you directly. And then of course, again, I'll see you hopefully at the end of April at the conference, Lord willing, so we can speak then. So
awesome. I do see one other question. Kim Stone asked, how is this money repurposed back into the community? So again, I'm going to leave the legal side of that answer to the document that I'll send out for you, but the way it works is actually really simple. We literally send you a check. So it is a physical paper check that we send to you. Now, we have other programs that allow you to get it digitally if you prefer. So we definitely can do that as well, to where the county can receive those funds. But again, the short version of this much longer, more complicated answer is my company is allowed to direct funds back into your community and to designate those funds per what we've discussed and where you would like those funds to go. So we are allowed to do that. And again, we'll see the document on all of that. But yeah, it's very simple. Once a month, we put together a report and we say, well, this is the amount that is profit. And we're going to take 50% of that. And my team either has these paper checks that get cut and go out, or we can send it directly to you, and we provide you with like a little portal that you can see the reporting and all that stuff within it. So that's how it's practically done. How it's legally done, I will leave that to the document from the attorney to explain that more in detail. So, but we did obviously vet this very heavily with the state of Alabama and attorneys and all of that good stuff. So, hey Mary, I don't see
All
any other
right.
questions.